Hello guys, welcome to my YouTube channel. It's your boy J Forex, aka Beep Smasher, like you already know. I know it's been a while since I dropped a video here on YouTube. It's actually been a while, but here is another video. So in this video, I'm going to talk about how you can identify the trend of the market to know when the market is about to change a trend from an uptrend into a downtrend, and then from a downtrend into an uptrend, and then see how the market moves in consolidation. That is when the market is trading sideways. So I hope you enjoyed the video, and please don't forget to subscribe, like the video, turn up the notification button, and you'll be the first person to be notified anytime I drop a new video. So without any further waste of time, let's get into.
Okay, welcome to my screen. So, like I said, we'll be talking about market trend. I'm going to do a quick video on how you can identify the trend of the market to actually know when the market is about to change from an uptrend into a downtrend, and then from a downtrend into an uptrend. So, before I go to the chart to show you how this thing works, we are going to take a few sketch. I will show you the ways the uptrend market moves and how the downtrend market move, and then is consolidating market, because the market moves in three directions. We have the uptrend, we have the downtrend, and then we have the consolidation. So for an uptrending market, the market goes like this. Let's say previously we were coming down, and then the market starts pushing up. The market in an uptrending market makes higher highs and higher lows, higher highs and higher lows. So this is basically how an uptrending market moves. At this point, we have a high here. This will be our first high. I'll label that with an H. And then we are going to have our first low here. I'll label that as L. And at this point, the market makes a higher high. So why this is a higher high is because this high we have here is higher than this previous high. And then we'll have a higher low here. Why this is a higher low is because this low is higher than this previous low here. So that's basically an uptrending market moves. Before this point will become a higher low, let's say at this point that the market has come back to retest this previous high. Let me adjust this to this point. Before this market could be counted, before this point could be counted as a higher low, we need to see the market take out this previous high, because the market could go halfway in between and then start tanking down. So we like to see the market break above this previous high, then forms a higher high on the pullback retracement to retest this previous high. Then we can then say that the market has successfully made a new higher low here, because this low will be higher than this previous low that we have here. That's basically how an uptrending market moves. Now, when we want to say that a trend has changed its direction from an uptrend into a downtrend, there are specific things we want to look out for in the market. So whilst this market is in an uptrend, we want to see the market come back into this high, into this particular high here, and then continue up. But sometimes the market could fail to use these highs here to continue up in this uptrend. The market could break below it. At this point, when the market breaks below it and then we start getting something like this, it doesn't show that the market has changed its trend from an uptrend into a downtrend. The market is still in an uptrend until we take out these lows here. You understand? So in an uptrend market, this is the low that the market should not break. If the market breaks this low like this, instead of using this point as support to continue up, if the market breaks below it, that is when we start seeing a reversal from an uptrend into a downtrend. I hope you got that. Let me take that again. When the market is trending up, making consistent higher highs and higher lows, this is the high where we expect the market to come into and bounce from there. But sometimes the market can break below it. We are still in that uptrend. You understand? Until the market takes out this low, that's the only time we will see this market reverse from an uptrend into an uptrend. So that literally means that the market could bounce from here, push up, then come back to retest. We'll still have that uptrend continuation to the upside. You understand? So this is the last low that the market should not take out in an uptrend. So that's the example for an uptrending market. Now, when we talk about a downtrending market, this is basically how a downtrending market moves. So at this point, we'll have a high here. At this point, we'll have a high here, and then we'll have a low here. We'll have a low here. So this will be our lower high. I'll label that as LH. And this will be a lower low here. I'll label this as LL. So the reason why this is a lower high is because this particular high here is lower than this previous high that we'll have here, and this low that we'll have here. Why it is a lower low is because the low is lower than this previous low that we'll have here. So from there, the market keeps on moving, making lower lows and lower highs, lower lows and lower highs, lower lows and lower highs. Now, how do we know when the market is about to change a trend from a downtrend into an uptrend? It's still the same thing, comparing it with an uptrending market. We know that when the market breaks a previous low, we expect it to come back and use that low to continue down. But sometimes the market could fail to use this low here, the recent low, to continue down. It will break above it. When the market breaks above that low and then comes back to do something like this, we are still in that downtrend until the market takes out this previous recent high that we have here. So that literally means that the market could come into this high and then still continue in that downtrend. Or the market could come, break above the recent low we have, then from there start moving up, and then coming into this high, instead of respecting it to continue down, it breaks above it. Once the market breaks above this previous high that we have here, this recent high we have here, that's the only time we could see the market reverse from a downtrend into an uptrend. That's basically how it goes. So this is our low of this is like an important high for us that the market should not take out in a downtrending market. If that happens, we'll see a total reversal to the opposite direction, which is to the upside. So that's it. Let's go to the chart and see if we can spot a quick example of what I just showed you guys, and we'll take it from there. So if we look at what the market is doing, this on Euro NZD pair here, let's spot the previous trend that the market was in, which is a downtrend. So we'll see here that the market made a high, made a low here, made a high, made a lower low because this low is lower than this previous low, made a lower high because this high is lower than this previous high, made a same low, made a kind of a same high, same low, same high. At the end of the day, the market broke those lows that we have there, made a lower high because this high here is higher than this previous low, this high here. Then at the end, the market broke these previous lows that we have here, made a lower low because this low is lower than this low here. Then came back to retest that area of our previous highs. To retest that area of our previous highs here. You see how the market came into that region, tapped and started falling. But observe something. At the end of the day, this became that high that the market should not break in this downtrending trend that we are. This whole movement to the downside, this becomes the high that the market should not break. So observe how the market came halfway, couldn't take out these lows here, then eventually broke out above that high that the market should not break. At that point, just like I showed you guys with that example, whenever the market takes out that recent high in a downtrend, if the market takes it out, we'll see the market possibly reversing into an uptrend. And that is exactly what happened there. We'll see this market started forming continuous higher high and higher lows, which is how an uptrending market moves. Until the market got to this point where we are now having a very serious consolidation. Consolidation is when the market is just moving sideways, up and down, without having any true direction. Like we are in a range. The market is not trending up, it's not trending down, it's just going up and down within a range. So you see at this point, the market came into this low, went back into that high. From that high, the market came back into this low. So there's a possibility now that from here, the market could go back into this high until we have that break to the upside or a break to the downside. That's just how a consolidating market moves. If we go back in time and look for more other examples of how the market changed a trend from an uptrend into a downtrend, let's look at this point. You see, from this point all the way to this point, the market was going up, which is like this. The market was in an uptrend. So we are seeing that consistent higher highs and higher lows. If we want to mark this low and then this high here, you see that the market made a low, made a high, made a low, made a higher high, because this high is higher than this high, sorry, is higher than this previous high, made a higher low because this low is higher than this previous low. Now observe how the market came back into these highs, couldn't take this high out, but it came back into that low that the market should not break in an uptrend. So we expected the market to use this high here after it must have broken out above it, retest it to continue up. But the market broke back into that particular high, then came back into that low. Let me zoom in. Came back into that low that the market should not kind of break in this uptrending market. And you see how the market respected it 2 times and then started pushing up. Then the market broke above that high. The recent high we have came back, retested it 2 times, pushed up, and then it was making consistent higher highs and higher lows. So in this case now, this is where we'll have a kind of a recent high we expected the market to come back into to continue up, and this was the low that the market should not break in this uptrending market. Remember, we had the kind of equal highs here and equal lows. The market broke above it, came back to retest it, formed a new higher high because this high is higher than this previous high, then broke above it. On coming back to retest, the market played around and broke below it. We were still in that uptrend. We were still in that uptrend until the market took out that low that it should not take out in an uptrending market. And this is where the market actually took out the low. And you saw what happened. The market came back to retest, and then from there, the direction of the market changed from an uptrend into a downtrend. So that's basically how it works. That's how to spot when a trend is about to reverse from a particular direction into another direction. Just like the example considered now, from an uptrend into a downtrend. And then I showed you guys an example of how the market changed from a downtrend into an uptrend from here. At this point, the market, if we take a random trace of the trend, low, high, low, high, low, high, then the market couldn't take out this low. You know, couldn't come to make another lower low. What happened? The market from this point pushed up and broke that high. It shouldn't break in a downtrending market. And from there, we saw a total reversal to the upside. So that's basically how it works. And I hope you guys got 1 or 2 lessons from this video you can implement in your own trading. Just go to your chart, back there, spot these points, spot those points the market was previously trending up and then started reversing. Look at the structures the market was breaking to see that it was those important highs and lows that the market should not break in a particular trend that was taken out, and then from there we saw a total reversal to the downside. So that's it for me, and I will see you guys in the other future videos to come. Don't forget to subscribe, like the video, and share if it's anybody you think that might need an educational content. And while you subscribe, you'll be the first to get my notification anytime I drop a video here on YouTube. So other than that, peace. See you guys later.